All right, good evening, ladies and gentlemen, and welcome to another $2,000 portfolio cash flow with I'm Possible Terence. All right, now my apologies for 2 weeks, the last 2 weeks over here. All right, okay, because of a clash of schedule, and last week I actually lost my voice. All right, I just got it back, all right, but I'm still having a bout of a little bit of a cough right now. Yeah, okay, so hopefully throughout the sessions I won't be coughing too much. All right, now, so if I do, all right, please accept my apologies in advance. All right, and also, all right, for my annual trading members, all right, okay, tomorrow, all right, we're gonna have our physical meetup, all right, in Singapore. Yeah, all right, now, so I'm looking forward to meeting up with all of you, all right, and then spending a day getting to meet all of you, know all of you better, all right, and then of course sharing strategies, all right, among the three mentors, all right, to all of you, all right, to capture the market's best returns at the moment. Yeah, all right, now, so do make sure you have a good rest. All right, and the three of us together, the rest of my team, will be seeing you live in person tomorrow. Yeah, okay, now, so without further ado, all right, let me get started to the session. All right, and yes, all right, now, so it is normal, all right, to expect a drop in numbers after disappearing for 2 weeks. All right, and just to set it up right, I didn't disappear. All right, it's just down to a clash of schedule and falling ill, all right, last week over here. All right, now, so if you can hit the likes before we get started officially, all right, I really truly appreciate that. Yeah, now, so if you look at the banner, all right, if you're joining us for the first time, all right, do drop a note, say hello, all right, and Facebook user, all right, okay, if you could go read the banner, all right, go to this website, streamyard.com/Facebook, all right, and then click on the Facebook button over there, all right, and approve your profile, all right, and I'll be able to see who's leaving comments, all right, and for us to know better, yeah. All right, okay, now, so another Facebook user over here. So if you do recognize your comments, all right, okay, please head over to the banner. All right, thank you very much, Susan. Yes, I'm much better right now. Still coughing a little, but all better. Yeah, okay, now, so tomorrow we're going to have a long day together, all right, sharing some important moments of the market and what's in store. All right, but let's do it right now first. All right, let me get started. All right, if you look at disclaimer banner at the bottom, they're scrolling across. All right, I will be talking about new trades that I'm putting inside my own accounts. Okay, but please be aware that all forms of investment, all forms of trading bears the risk of loss. All right, so by no means are these or whatever I discussed in the session, right, any form of personal recommendations at all. All right, okay, they are to be treated as coming from an educational purpose. All right, I just want to show all of you, right, that a simple, non-time consuming portfolio can actually be built, right, for any common investor out there, right, with some very, very simple approaches, right, on some of the golden rules of the stock market, which is buying some of the best companies at a low price, right, and then selling when it gets higher. Yeah, right. So utilizing that one core golden concept of the stock market, right? How do we start selling portfolio puts, right, to achieve our cash flow goals? Right, that's been what we've been doing for the last 12 months. All right, we are now heading into the 14th month. Or no, yeah, all right, 14th month or 13th month. Sorry. All right, the 13th month together. All right, okay, so we'll look at our records for May expiry. All right, and then we'll go and head towards, all right, the first month, all right, for the new year. All right, so it'll be a pack session over here. All right, and hi, Margaret. Hi, Patrick. Hi, John. All right, thank you for joining me back in this Facebook live session. All right, now, so without further ado, all right, let's get ourselves started, shall we? All right, and I didn't forget. All right, I'm going to remove the banner first. All right, there we go. Okay, all right, now, so true to the nature over here, all right, we will start off the session just doing a recap of what happened last week. All right, so last week, all right, market started to kind of got weaker. All right, okay, weaker not in the sense of the indexes, all right, but weaker across the board on all the sectors except technology. All right, so the market is still held strong right now simply because of just big tech alone. Right now, so if you have been in the markets for a while, right, you know that if just one sector is holding the entire market, all right, it is not healthy at all. Yeah, okay, it is not healthy at all. All right, now, but because of the sell-off, right, in the rest of the sectors, right, it's affected some of our portfolio positions, right, like our Hog, all right, and Macy's, which are retail stocks. All right, so retail stocks took a beating last week. All right, so I decided to take over the stocks itself because these are dividend-paying stocks. Right, so I'm served better, all right, actually holding on to the stocks and collecting dividends, all right, okay, as compared to moving the expiry date of a portfolio puts. Yeah, okay, so that was better for me. All right, and then for Apache, all right, and VF Corp, yes, all right, Apache and VF Corp, all right, we did option extension, all right, okay, so we closed our May expiry portfolio puts, right, and we moved them to the June expiries over here, right, for an additional 75 cents credit for cash flow, right, for Apache, all right, so that gave us an additional $225 in cash flow for the month of June. Yeah, okay, and right, a 60-cent cash flow, right, for the move over, right, in VF Corp. All right, so for 2 contracts, that added another $120, right, in cash flow. All right, now so our FITB 50% of the time premium has also been realized. All right, so last month, all right, we actually fell short. All right, okay, we came in at $1,876. Right, but all in all, we still managed over $24,000 in cash flow, right, for our first 12 months together. All right, so all in, all right, okay, we hit all but 1 month. Yeah, okay, now, so this is more than $100 down, right? So I'm going to consider missing it all but 1 month. Yeah, okay, now, so to me, I'm still happy because we've hit our goals, right, more than 90% of the time, right? So that's still a very, very high hit rate, right, in a very, very difficult market condition, right, especially for value stocks. Yeah, okay, that is what we're going after, value-driven stocks, right? Okay, but we're hitting the goals 11, sorry, I got my facts wrong over there. 11 out of 12 months, right? I think we did pretty well. Yeah, okay, now, so heading into the new year, all right, that's when the new challenge came about, right? Because many of you kept asking, Terence, what if you start having, more and more stock positions, right, after being assigned on the options? Will it affect your ability to generate cash flow, all right, and hitting your monthly goals? Right? That's left to be seen, like I keep saying, right? Okay, when the time comes, I'll show you how it's done. And now the time has come, right? So this month, all right, I'm actually going to show you, all right, how I'm going to plan and how I'm going to reach towards the $2,000 cash flow target. All right, now, so right now we're sitting at $600, all right, $600. So let's see what can I do to the portfolio today, all right, or what moves will I make, all right, to bring us closer to that $2,000 mark. All right, now, so without further ado, let's go analyze the markets together first. All right, and if we look at the markets together, right, here we are, ladies and gentlemen. All right, so we look at the SPY, which is the S&P 500 indirectly over here as a stock format. All right, okay, we have the stock, we have this index trying to test, right, a double top. Right, it's a very short-term double top over here. All right, if we do get a divergence on the RSI, yeah, okay, it can actually lead to a negative signal, all right, on the entire market itself. All right, now, so you may be asking, Terence, what drove this gap up and what drove this, follow through today? All right, okay, it's all down to one stock. All right, and if you were living in a nutshell, yeah, okay, it was all down to NVIDIA. All right, okay, now, so why NVIDIA over here? All right, because NVIDIA, all right, okay, powered, all right, this new generation sector called AI, all right, artificial intelligence. All right, so when NVIDIA posted really exceptional results over here, it surprised everyone. All right, okay, so there were many short sellers, all right, that were caught blindsided. All right, so yesterday they had to run for the cover. All right, okay, now, so if you remember what happened to GameStop, if you remember what happened to all the mini stocks during the pandemic time, all right, it happened to NVIDIA because of the earnings results yesterday. All right, but they were not retail players, they were big funds, all right, that were actually short, right, on tech stocks, right, heading into the earnings. Right, so they were caught blindsided over here, and they were left no choice but to quickly cover, right, all their short positions as best as they can. Right, but indirectly, right, because NVIDIA is linked, right, to artificial intelligence, right, and the boom of AI right now. Okay, all other AI related companies, right, also enjoyed a good day. All right, now, so all in over here, right, the entire technology sector pulled the S&P back up. Right, if you realize what happened to the QQQ yesterday, all right, it had a really, really big day as well. All right, now, so if we load the QQQ chart, there you go. All right, there was a massive gap on the QQQ over here. All right, so you can tell, right, that the entire S&P rally, all right, was none other than driven, right, by the tech stocks. So once again, right, we are back into this very, very unhealthy condition. Right now, I keep saying it's unhealthy condition, right? Because if you haven't realized, right, many Federal Reserve, chairmen, no, not the chairmen, many Federal Reserve governors, I would say, yeah, okay, are now hinting, right, that we are looking towards another interest rate hike. All right, and if you're clueless about this market, right, interest rate hikes hit the technology sector the hardest. Why? Because most technology stocks, right, take out big amounts of loans, right, to run their businesses. Right, so with higher interest rate, that means they meet higher interest payments, right, which indirectly, right, will lower their earnings. Right, so with lowered earnings or lowered future guidances, right, all these stocks will start falling off. Right, so with all these stocks at very, very high valuations over here, right, we could be back, right, towards another run, right, like what we saw, right. I would say, okay, not for the video over here. All right, let me see if I can show you something that's more. Yeah, all right, we could see a run, right, like what happened to Amazon over here, right, or what happened to Meta over here, all right, okay, where I would say in more or less, yeah, something like that. There we go. All right, the sell off. Yeah, okay, we could be back, all right, into looking into the same scenario over here. All right, so let's go to Nvidia. There you go. All right, the sell off. All right, okay, Microsoft. All right, the sell off. All right, okay, so if all these big tech stocks were to fall and correct 20% from here, all right, okay, it could be disastrous for this market. All right, why? Because when the tech falls, right, the market fears first, right, before it gets logical. So when markets go into that bunker mode, the shutdown mode, right, they would sell everything. Right, so when they sell everything along with tech stocks, right, that's when we have that massive correction. Right, so I'm not trying to be a doomsayer over here, all right, but this is definitely something you have to be prepared for. Right, so if you're too bullish on your entire portfolio right now, right, it's time for you to start loading up on some defensive sectors or some defensive stocks. All right, now, so with that, all right, we're going to go into our first position for today. All right, now, so let's go into our portfolio very quickly. Right, and with the market sell off and being down, all right, okay, first things I'm going to add to you. All right, I'm going to keep this very short today. All right, why? Because most of our stock holdings, right, which is WBA, Intel, Verizon, Tyson, HBI, Pfizer, Hog, which is Harley Davidson, Macy's, all right, 3M, all right, and AT&T. Yeah, okay, all right. All these stocks are on the low end, which means I'm not going to be selling any call options, right, to generate cash flow for this week. All right, I'm not going to do that. Yeah, okay, so I'm going to just hang on to the stocks. Yeah, okay, collect the dividends as they come. Right, but if you realize my portfolio do not consider dividend payments, right? So if I had considered dividend payments during the first 12 months, right, our cash flow total would have been higher. Right, but I'm just excluding all of that. All right, just like I exclude the commission factor. All right, so I exclude the commissions, which is a cost. All right, okay, and I exclude the dividends, which is an income. All right, that kind of squares it off. Yeah, okay, all right, now, so over here, all right, what I'm going to focus on today is the new positions that I'm going to add to this portfolio. All right, so I keep saying I'm going defensive. All right, so one of the first defensive stock, all right, that I can put into my portfolio, all right, is of course another oil stock. All right, now, so we're not going to be surprised, in terms of going back to another oil stock, because I'm just going back, right, to another stock over here, right, which is severely undervalued. Yeah, okay, now, so we're looking at Devon over here, all right, okay, which is trading at a 5 PE ratio. All right, okay, now, so we did the same, all right, when we traded Apache. All right, so oil stocks have been falling, quite recently. All right, but when the market does come off, yeah, okay, all right, we know where oil stocks is going to go. All right, now, so in that case, I want to be able to capitalize from it. All right, and also coupled with the fact that there are not many choices that you have in this market at this moment that presents a lot of value. All right, because most of them that are screaming value and cheap, right, are already sitting in our portfolio right now as stocks mostly. Yeah, okay, now, so with that, I'm going to add Devon, which is a stock that we traded so far, right? And because of the impending correction that I expect from the market, all right, instead of going 1 month, all right, I'm actually going to give it more time, right? Just in case it corrects, right? I have enough time on my option expiry for this portfolio put, right, to ride the channel and then come back up again. Yeah, okay, now, so this is something you have to pay attention to, right? Okay, when you take the big picture into your portfolio planning. Right? Why? Because if you do expect an upcoming correction, right, what you can do is you can plan ahead. Yeah, okay, the stock is cheap, right, but the stock may also be affected by sentiments when it first sell off. Right, so if you don't want to deal with the expiry of the option when the first sell off comes, then give it more time. All right, so that's why I'm choosing to sell 2 months over here. All right, and the stock is sitting at about 47. All right, so what I'm going to do is I'm going to sell a $45 put option over here. All right, okay, now, so hang on for a minute. All right, I just realized I haven't set up my live portfolio, right, that I maintain with all of you over here. All right, so let me get it set up over here. Right now, so I'm looking to sell about about 3 contracts for my portfolio over here, right, on Devon. right? So that's what I'm looking to add over here. All right, so in the meantime, just let me log in over here. All right, hang on, let me just drag it over. Okay, while we are waiting for the platform to launch, all right, let's go into adding it into the portfolio and showing you how it looks like. Yeah, okay, now, so I'm going to add, whoa. Okay, so I'm going to add Devon over here. All right, so I'm going to be selling three of these options for the 45 strike. July. Um, 174. All right, it's done immediately. All right, now, so if you verify over here, I just sold Devon July 21st, $45 puts. I've sold three of them for 175. Wow. All right, I got better, 175. All right, now, so with that over here, let's get the recording done. Okay, this is going to be trade number 85. Okay, on Devon. All right, I just sold three of them, right, for 20th July, no, 21st July. 45. All right, today is the 27th of May. Yeah, okay, is it the 27th? Let me check my calendar. No, today is 26. Sorry, 26th of May. Right, I've been unwell. I lost track of time. 175. Right, there we go. Right now, so this one has to be divided by 2 because I'm selling it across 2 months. Right, so I just added $260 in cash flow, right, for the month of June. Yeah, okay, now, so the other half of it, all right, will be recognized, right, in the month of July. Right, there we go, July. Right, so I'm only going to be accounting for one margin, right? Okay, because because it's split into 2 recording positions. Yeah. Okay. All right. Now, so we're going to be splitting that. All right. So now I'm sitting at $867 for this month. All right. So I'm not done for today yet. At the moment, right, my portfolio funds is utilized at $166,000. So I'm overstretched by 29%. All right. So for those of you who have joined me longer, all right, you realize that I'm comfortable going up to 140%. That means a 40% over leveraged on my cash holdings of the entire account. Yeah. Okay. All right. Now, so if those of you are new who are joining us, you may not understand this. All right. So adding all my cash flow from the last 12 months, right? My portfolio right now has $128,900. So I started from $100,000. All right. After 12 months, right, we're sitting at $128,900. All right. So using a total of, all right, $166,500, right, that represents 129%, right, of my entire capital itself, right? So I'm 29% over leverage. Right now, so bear in mind, right, that even if my entire account, right, has to be held, right, all stocks, right, okay, brokers in America, right, are willing to give you a loan, right, very similar to the Singapore markets. Yeah, okay, they're willing to give you up to 50% loan on the cost of the shares. All right, so that would actually double, all right, the capital that I have. So if I have 128 or 100, let's round it up to $129,000. All right, if it were all in stock positions, I would actually have double the amount. So that would make it about $250,000. All right. Sorry. All right, now, so I hope you see where I'm going over here. All right, pardon for that. Yeah, okay, now, so that would put 29% leverage, which means I still have a little bit more room, all right, okay, to take on another portfolio put, all right, and, to eke out the extra cash flow for the month of June. All right, now, so with that, all right, let's get to another defensive stock. All right, now, so the next defensive stock that I want to add to my portfolio, all right, okay, it's going to be our, how do I say this? Not really pharmacy, all right, but I would say consumer. I can't even say consumer staples, all right? It will belong more towards pharma. Yeah, okay, why? Because CVS Health, all right, okay, is pretty much a health-related company. It runs pharmacy outlets, all right, and also healthcare, all right, like seeing the doctor and then selling prescription medicine all in one store, all right, okay, so it's like an all-in-one health company, all right. Now, so if you look at the charts over here, it's definitely not been doing well, right? But with this double bottom over here, the stock is setting up for a divergence, all right? Okay, and with the cheap valuations, I like it, all right? Why do I say it's a cheap valuation? You just add the last 4 quarters of earnings, right? And you'll realize that the company makes about $9. Yeah, okay, the company makes about $8.70. Yeah, okay, in earnings. If you take the stock price divided by the earnings, that's 8 PE ratio, right? A PE ratio of 8. Right, on a company that earns very well, does not have any cash flow problems, and on top of that, right, paying a good dividend, right, which represents 3.6% currently based on the stock price. Why not? Right, so this PE ratio is once again wrong. Right, so whoever their provider is for TD Ameritrade platform, right, is showing an error over here. Right, because we did our manual calculations. Right, okay, this will be the most accurate over here. All right, okay, and it brought us to about 8 PE. Right, so that's cheap. Right, and the stock being so sold off, right, in a pharmaceutical sector, right, okay, we can actually get the bounce, right, okay, when funds are fleeing high-tech, volatile stocks, right, they need to park their funds somewhere, all right, so this would definitely be a sector where the funds can go in, all right, okay, now, so with that, I'm looking to add an exposure over here, all right, and the same thing, I'm going to add it for 2 months, right, and I'm going to go for the 65, all right, okay, so I think we can go for the 65 over here. All right, so let's go for the 65. All right, so the same thing, I'm just going to add 3 as well. All right, so 150. Done. All right, now, so I sold 3 of these CVS July 21st, $65 puts, all right, for 157. Yeah, okay, now, so that order is done over here. All right, so let's do the recording in our portfolio and let's see what's the cash flow that we've generated based on today. Yeah, okay, now, so same deal. All right, this is going to be trade 86. All right, CVS, 65, 157. All right, now, so that's going to bring us $235. So we are, just across the $1,000 mark. All right, so I'm happy with that. All right, okay, I'm happy with that. All right, so I'm not going to be complaining. So we are $1,100 for the month of June. All right, so we've got about another, I would say, how many weeks? 3 more weeks to go. All right, so we got some time, all right, for our stocks to bounce, all right, and then perhaps add some cash flow from selling calls, all right, and we'll see if we can add or squeeze in a little bit more put options, all right, and for now, oops, no, I need to add the exposure. Right, I'm nicely set at 140%. So even if I wanted to today as well, right, okay, I couldn't add anymore because my account is held to the 140% mark. Right, so I'm going to hold my stocks. I'm going to hold my positions over here right now. Right, I'm sitting at $1,100. Right, so I'm $900 short with 3 more weeks to go. Right, so do make sure that you keep coming back and joining me for these Friday Facebook Live sessions. Right, if you want to find out how I can hit my cash flow goals for the month of June. Yeah. Okay. Now, so that's all the trades I'm going to be doing for this particular live portfolio for today in this market together with all of you. So after taking a pause for 2 weeks in a row, all right, I'm more than happy to allocate some time, right, to answering questions if any of you have any for me. Yeah, okay, in relation to my actions, what I've done with the portfolio, and how we're moving forward. Yeah, all right. So if you do have questions, just post them right now, right, inside the comments, all right, and when I see them appear on my screen over here, I'll start answering them. Yeah. Right now. So in the meantime, all right, there may be some of you who are new and joining us over here. Right. So how I manage my portfolio is, right, if I'm forced to be assigned the stocks, right, I will allocate the full cost of the stock, which is 100% of the total cost. Right. So if you realize over here, all my formulas are based on 100%, right, the cost of owning the stock itself. All right. So for every assigned stock position, you realize it's all 100%. Right. Okay. Now, only when it becomes a portfolio put, right, that's when I only allocate a 70% margin. Yeah, okay, so 70% of the total cost. All right, now, so apart from that, all right, the rest which are in stocks, right, are now, allocating 100%. Yeah, okay, now, so I'm only 40% over leverage right now, which I'm comfortable with. Right, so that's also the maximum, so I don't try to go over and beyond that. Right now, so that means, right, if I'm going to drive more cash flow, all right, it has to come from selling call options, all right, or it has to come from closing some of our trades profitably, all right, and then reloading again after that. All right, so I don't know which one will happen first. All right, let's see. Maybe I'm just going to miss this month's cash flow. All right, who knows, right? But only time will tell. Yeah. Okay. Now, so I can't force the market as well. I can only act according to what Mr. Market is giving. All right. So let's see what it wants to do. What kind of hands it wants to do me. Yeah. Oh, so I don't see any questions appearing on my end of the screen over here. All right, so I'm not too sure. I'm going to give it a little bit more time. Okay, then. All right, so it seems like none of you who are joining me today has a lot of questions for me. All right, so we can save it for next week's live session together. All right, no worries at all. All right, I will always be allocating times. Hoy, all right, so Hoy has a question for me over here. Do I consider REIT? Let me put it this way. I do not specifically consider REIT stocks, okay? But if the REIT stocks exhibit, all right, the fundamental characteristics that I'm looking for, yeah, okay, I would actually talk about the valuations. All right, I'll have a look at it. All right, and if it is cheap, all right, I will also trade it. All right, but it's not very often that I'll trade a REIT stock right now. Yeah, okay, especially in this current market condition. All right, why? Let me add on as well. If you realize what's happening, higher interest rates, how does it affect housing? How does it affect take-up rates, right, for rents? Yeah, you see where I'm going. Yeah, okay, the economy is not doing well, right? People are getting laid off, right? Companies are also forced, right, okay, to cut down on their expenses, right? So with all these that's happening over here, right, okay, where does it leave us? All right, okay, so Hoy, right, as a whole, right, REIT itself, I do not like the outlook. Yeah, okay, so unless it's something that stands out, all right, I would skip REITs altogether right now. Why? Because REITs pay dividends, right? But the dividends are not fixed. The dividends are basically a calculation of about 90%, right, of the profits that they generate, right, out of the REITs from the rental that they collect. All right, so if they have more vacancy rates over here, all right, okay, we're going to be expecting, less profits, which also means less dividends. All right, so just like any good stocks out there, once dividends are being cut, yeah, okay, or paid on a lower amount, all right, what will happen to the stock price? Yeah, okay, so that's basically not a defensive sector or not a defensive stock, right, where I want my funds to go in with where the market is at the moment. Yeah, okay. All right, now, so that's basically what I would say right now. Yeah, okay, now, so Hoy, like you said, some specialized REITs. All right, now, so I will put it this way in a very simple term. All right, okay, when you specifically put out that term specialized REITs, it means that you have to do more research. It means that you cannot just base your analysis on your common sense logic or common sense understanding of business as a whole. So it needs a specific, right, in-depth knowledge of that specialized REITs itself. You see where I'm going? All right, and that's not how I want to build this portfolio. Right, especially if the target, right, is for the common investor on the street, yeah, who doesn't really love or doesn't really want to do that much of these kind of homework. Yeah, okay, so for that reason, right, I do not target those kind of stocks. Yeah, okay, all right. Now, no worries, Hoy. All right, okay, now it's just being specific, right, to the target, to the angle of the audience, all right, that I'm trying to benefit over here in my Friday Facebook live sessions, all right, and trying to keep things simple. All right, okay, if this was a very specialized, kind of fundamental based option selling, then perhaps, we can go in depth into that kind of analysis, right? But it's not something that I do personally as well. Yeah, okay, because I want to take my time off the market, but to ensure that I can still hit my cash flow goals. Yeah, okay. All right, now, so next one over here, all right, Senzoros, all right, thank you for your comments. Debt ceiling opinion, all right, I want to tell you this, all right, many of you believe, all right, that, it's just a kind of rouse, all right, that means, all right, they're playing like a game over here, all right, but you must understand that this game has its own threats. Now, what threats do they have? Right, the market is expecting, all right, okay, the debt ceiling or the whole situation, right, to be resolved. But you must understand, when it comes to the Democrats and the Republicans, right, it's a power struggle. All right, okay, when it comes to a power struggle, all right, okay, they may just want to teach each other, right, a lesson or two, right, before they come, right, to the common good and common conclusion. We've seen that before. You forgot? All right, okay, so that means they cannot meet, all right, with an agreement. All right, okay, so the bill will not pass, all right, and it goes past beyond and expire. All right, so the government goes into a shutdown, all right, okay, and then they go back into the books, right, and discuss it further before they resolve it and come to a final solution, right? So if that were to happen this time around, the market is not ready for that, right? So you see the danger over here, right? We all know, right, that it's going to be resolved, right? But the question now is just like earnings, right? Right? Is it going to be resolved in a good way and the expected timeline, or it's going to go beyond what's expected? That's the danger over there. All right, that's the boogeyman of the market. Okay, Senzoros. All right, so I hope I give you an insight over there. So you must always plan, all right, for what if, okay, when you make your next trade at this moment. All right, okay, because many people invest, right, especially as common investors, looking only at the positive outcome, right? But that leaves you open, right? Okay, in case the negative appears, you're totally unguarded, right? So always make sure you're fully guarded, you're fully protected, no matter how bad the outcome turns out. Yeah, okay, so that's how I plan my portfolio. Okay, Senzoros, I hope I answered your question over there. All right, now, so Facebook user. All right, now, as we said over here, just to be fair to everyone, right, you will need to approve your profile. I will need to see who I'm replying to, right, before I will answer a question that pops up in the comments, okay? All right, so if you can go to streamyard.com/Facebook, all right, okay, approve your profile and then come back and post the questions. I'll be more than happy to answer that, okay? All right, now, so Layla, all right, I hope I pronounced your name correctly. All right, now, so this is, this is your first time on a Friday Facebook live. My apologies. All right, now, so I just want to say this, right? How I run my public Friday Facebook live sessions, all right, okay, versus my students and my communities who join me for live trading sessions every single week, right, are utilizing the same portfolio concept, right, but different approaches. Okay, now, so for the public in general, which is these Friday sessions over here, right, we have to do it via a portfolio put strategy, which means I set aside the allocations that I've described earlier. Right? And for that purpose, you will need at least $100,000 account, right, to achieve that $2,000 cash flow goal. Yeah. Okay. All right. Now, so that's what we're doing over here. So Layla, right, I did started with $100,000 portfolio, right, about 13 months ago, right. It's now worth about $128,900. Okay, after 12 months. Okay. All right, so Facebook user, all right, I just spotted your question. You know what to do, yeah? All right, okay, you know what to do. Okay, now just to help you over here, all right, I added the, there you go. All right, since it's on the screen, it doesn't harm me. Yep. All right, now, so, so Desmond. Oh, Desmond. All right, Desmond, you have TSM at $90 and I have some sell calls at $90, but now that the stock has soared to 104, all right, call options is expensive now. All right, Desmond, all right, the first simple question is this, all right, if you let them take away the stock when your call options expire, are you losing any money at all, right, on the stock? If you don't, then just hang on to it, right, and let them take away your shares. All right, why? Because as options are still being traded, right, okay, there's this thing called the time value premium, all right, okay, where you see your losses right now. Yeah, okay, so when it gets to expiry, right, there will no longer be any more time value added onto the intrinsic value of their option, right? Okay, so when they claim your shares away, all right, you will have to sell off your shares at $90, all right? Okay, so it all depends on how much you bought those shares for. Yeah. Okay. All right. So if you got them at cost at $90 and they get taken away from you at $90 as well, then you didn't lose, but you didn't stand to make all those potential profits. Okay. But you did collect all the premiums for selling the calls. Yeah. Okay. Now, so your next question is, should you be rolling over the calls? Then is there a benefit? All right. I could do it very, very cheaply with my Intel because the stocks was cheap. All right. But if you do this with $100 stocks, right, are you willing, right, to sacrifice those cash flow? Why, Desmond? Remember I said, right, what's pending next? If the market sell off, right, which sector is going to sell off now? Right, and if it sells off, right, do you see, right, TSM falling off very quickly as well? Is TSM overvalued? Those are the things you need to consider. Those are the things you need to look at right now, right? And those are the things, right, that we cover, right, when we analyze our stocks, right, week after week after week, right, inside our live trading session, right, together with my students. Yeah, okay, I teach them the rules. I teach them how to find the reasons, right, of whether you should close your trade, whether you should continue with the trade, right, whether you should take action or not. Yeah, okay, so with those logical approaches, right, your decision-making process becomes consistent, right? Okay, and when your decision-making process becomes consistent, right, it's repeated, right, under the same actions all the time, right, so will your portfolio performance, right? So that's my philosophy when it comes to investments. Yep. All right, now, so you're back, all right, Lao Yat. Yeah, okay, now, so no worries on that. So Intel, all right, it's going to rebound, but how long it's going to take, I don't know. Yeah, okay, I really don't know. Why? All right, because, all right, when these stocks, right, who are profitable stocks, right, okay, when they catch a buyer, right, they can actually jump very, very quickly and very swiftly. Look at Pfizer, right? So everybody thought Pfizer was dead. It even went to a bottom of 36. But look what happened in just what, 2 days, right? It went up, literally from 36 to $40. That's a $4 jump. That's a 10% jump in just 3 trading sessions. Can it happen to Intel? Can it happen any day? Can it happen tomorrow? It can. So who's to say, it won't? Yeah, okay, now, so I can't tell you for sure. Yeah, okay, I can't tell you for sure. All right, okay, but, all right, it will bounce up. Just when? I don't know. Yeah, okay, so that's why we have the logic of buy low, sell high. All right, and at the moment, yeah, okay, while I'm still holding on to my Intel stocks, it is still paying me a dividend right now, so I'm not complaining. Yeah, okay, still paying me a dividend. I'm not complaining. They're still the biggest giants when it comes to, processor chips. All right, so I'm not complaining as well. Yeah. Okay, so that's all the questions that I see on my screen at the moment. Yeah, okay. So we'll end the Facebook live session over here together with all of you today. All right, and I'll see all of you once again, right, next Friday, right, on our Facebook Live for Portfolio Cashflow, okay? This is I'm Possible Terence signing off, right, for my students who are coming to the live meetup session tomorrow. All right, I'll see you, all right, in the morning, yeah, okay, for a full day session of learning. All right, bye for now, everybody. All right, and I'll catch all of you again soon. Bye-bye. Thank you.